Hello traders, my name is Logan Funding Talent, and in this video we're going to be doing the market forecast for the week of September 20th. In this video, what we hope to highlight is the best technical setups that we are currently eyeing up and looking to act upon in this upcoming week, as well as some fundamental drivers that you should be aware of and stay away from if you need to, as well as some current economic drivers that are impacting our current global economy. So, without any further delay, let us get right into the video. So here we are on the slideshow, and without any other delays, let us go right into our fundamental drivers of this upcoming week. In this upcoming week, we have a lot of news as opposed to the previous week. So starting off this week, we have all-day Canadian dollar news for the federal election, which should be very exciting for our Canadian viewers and the rest of the team up in Halifax. 9:30 p.m. news for the Australian dollar. No news on Tuesday. Wednesday, we have some 2 p.m. These times are in Eastern Standard Time, please remember. 2 p.m. EST USD news, as well as 2:30 USD news. Then on Thursday, we have 3:30 a.m. CHF news, as well as some Euro news at the same time, and then 7 a.m. GBP news. And then on Friday, we only have some more USD news at 10 a.m. EST. So the University of Michigan's consumer sentiment for the U.S. edged up to 71 in September of 2021 from a decade low of 70.3 last month in August. So what is consumer sentiment numbers? Consumer sentiment is a statistical measurement of the overall health of the economy as determined by consumer opinion. It takes into account people's feelings towards their current financial health, the health of the economy in its short term, and the prospects for longer-term economic growth, and it is widely considered to be a useful economic indicator. This means that the sentiment hit a decade low, meaning its lowest ever reading in 10 years in last month, August, and has slightly rebounded from that 70.3 number to 71 in this month. In other news, the DAX 30 sank 1% to a 2-month low of 15,490 on Friday, as global growth concerns, the lingering threat of COVID-19, and tighter regulation of Chinese firms continue to weigh on market sentiment. That being said, it feeds right into our reading of market sentiment, which goes along with what we've had for the last little bit, right? Risk on market sentiment. For our traders who are not aware, that means expectations are higher for further economic growth. And as currency traders, we can expect the New Zealand dollar, the Canadian dollar, the Australian dollar, the euro, and the pound to appreciate, as well as global indices should this risk-on market sentiment continue. So for our technical setups in this week, we're going to look at Australian dollar, United States dollar. This is a pair we called out for you guys at the top here, and we caught a successful trade off this double top lower, and you might even still be in that trade. If you are, congratulations, this is working out phenomenally for you. I would probably look to be taking profits off the table at this time. You are up a fantastic amount, and I would not be stretching your luck on this trade, but it has worked out very, very nicely. So congratulations if you were in it. Here is NZDJPY. We called out for you guys last week. I called for a retracement down to this level. If we pulled up from this level we're at now, I would consider that a successful retracement. It's getting very close to the levels we were looking at prior. And so far, it's working according to plan. Let's keep an eye on this in the next week as well. Continuing with our bullish uptrend on NZDJPY. So moving into our next chart. This is back on oil. I know I've been talking about this chart a lot with you guys because we are getting near this very, very important resistance line that I'm currently looking to trade off of. So what we're going to be looking for is a retest of this line, which we're getting very close to, and then two situations, which I know isn't the most helpful, but when you think about it, it actually is very helpful, right? This resistance line is a huge factor in the next direction of WTI. So we could, of course, have this scenario happen where we have a retest, confirmation, and a breakdown of price, confirming that level once again and moving lower. Or we get a very, very important breakout on the daily chart. And we'd actually be looking for a close on the weekly because we did get some closes on the daily and had a fake out. But what we'd be looking for is a break above, not necessarily this high, right? This is not exactly a representation of price, but rather what price may do. So we're looking for a breakout, a confirmation, And the same situation as on the bottom, but on the top, right? A confirmation of that level, which is resistance right now, break the resistance, turn it into support, and then continue off of it. And that would be our long trade. And that would be a fantastic long trade considering we've never broke above this trend line in the history of oil. So we're really going to be paying close attention to this in the coming days. Looking at DXY, it does seem like we're having a very strong recovery in the dollar this last week, but our head and shoulders play is still valid. This will become invalidated once the right shoulder reaches about this point, and definitely once it breaks the head, if it does that. But what it looks like may happen is price will come up, as we saw, we broke out of this, already confirmed it, started this support line, which is the neckline, come back up, retest this resistance, right? It was support. Once we broke down, then it turned into resistance, confirmed that resistance, and move lower, completing our right shoulder and helping the DXY come lower. Remember, the head and shoulders is not active until we get a break of this neckline. So right now, we're just anticipating. So I wanted to show you this chart because I think this is an important level on GBPCHF, and I do think we're going to turn bearish off of this level once we get a strong rejection. As you can see, we've retested this level 1, 2, 3, 4, 5, 6, 7, 8 times, but this also could turn into an oil similar situation, right? We get a break above, retest, and then a push off, and that would also yield a really, really great trade. Either way, GBPCHF is lining up for a fantastic trade, and it seems in this week we have 2 really, really great trades lining up. We don't know if they're going to be long or short yet, but we're willing and able to catch both moves, right? We're ready for both. EURUSD, just to recap from last week, we called a trade once we got the breakout here. So far, working out great. Congratulations if you took this. It's working out fantastic. I would start to lock profits, take some profits off the table, but final take profit will be this level right here, $1.16. But until then, we are just going to ride this one out. And here we are on silver. We got our take profit hit on this. This was a trade we called out a couple weeks ago. We got our take profit hit on this wick on the 8th. And now I really don't think we're going to be heading much lower on silver. So my bias is bullish on silver because I think we're overextending this bearish impulse wave. Here's an interesting chart, my chart of the week, which is the DJI, the Dow Jones Industrial Average. And the reason that I want to bring this up is because we got a really clean breakout of this ascending wedge, right? So what we're looking for now is a breakdown and a continuation to the downside, and I am pretty confident we are going to see some bearish momentum in the DJI. So here is USDCAD. We just marked up this setup for you guys. Here's another head and shoulders with a reversal zone covered in, which we use to signal when the right shoulder may end or when a corrective wave might end, which the right shoulder is a corrective wave of this wave, right? So this is what we're looking at on USDCAD, and this could line up to provide a very, very high probability trading setup once we get a breakdown of this level. So traders, I really hope you enjoyed this video. I really hope you could take these technical setups that we displayed for you today and apply them into your own trading if you deem them fit. And also you take some valuable insights regarding the fundamental drivers of this upcoming week into account while you're doing your trading. So, if you're not already following us on all of our social media platforms, be sure to do so because we're releasing new content across all of our various platforms every single day and videos just like this and even better on our YouTube channel. So be sure to subscribe. We have a lot of upcoming plans. As always, on behalf of everyone at Funding Talent, happy trading.